Hey, it's Zane here and welcome back. I want to thank you for tuning in today. Please remember to give this video a like. It's a free and easy way to support the channel. But I want to thank you for joining me today, and in this video I want to talk about retirement, and I want to kind of zero in on the part that Bitcoin can play in a retirement strategy. And I think this is important because I did a little bit of research and I get quite a few questions from people from time to time when I do my one-on-one consults and coaching sessions, people who are looking to onboard into Bitcoin for the first time, and I kind of guide them and point them in the right direction. But a lot of people are starting to think about retirement, and they're in their mid-40s, early 50s, and that is a really important time, I believe, that you and I should be really paying attention to what our future is going to look like financially in 10, 15, 20 years from now. Now in Australia, what's really interesting is that it's recognised that the retirement age is 65 years of age, but of course we know that a vast percentage of people beyond the age of 65 are still working. Many people can't see a path forward where they will not be working. The cost of living, everything associated with that, has meant that most people are going to be working essentially till the day they die. Unfortunately, the pension's not enough. Most people don't have enough in their superannuation accounts. And so this is going to be a problem that I think is only going to become more and more prevalent as the years go on. And what's interesting is that most people, in fact, the average superannuation balance, and for those of you who are not in Australia, superannuation is like our 401k. It's our retirement fund that employers are obliged to pay into for their employees, into their retirement accounts. At the moment, the rate is 11.5% of their annual salary is required for employers to put into their employees' superannuation accounts. And so, people who have been working in a career for 20, 30, 40 years, for the most part, they generally have a significant amount of capital sitting in their superannuation account. The problem is that most people don't pay attention to it until it's too late. And the good news is that in Australia we have the ability, if we have, I believe the figure is more than $200,000 in our superannuation account, and that doesn't have to be just individual, it can be yourself and your spouse. But if you can put together $200,000 combined with yourself and your spouse as a minimum, then you're able to set up what's called a self-managed super fund in Australia. And the reason to do that is because what we notice is that most superannuation funds in Australia, the average balance is sitting at $360,000. So 360,000 Australian dollars, when you look at people who are aged between 60 and 64, that's the average balance today that we see in most retirement accounts, in most superannuation funds. Now, you and I both know that $360,000, when you've still got a good 20 years in front of you, and hopefully more like 25 or 30, it's not going to get you far. And the other issue is that we have this thing in Australia called the pension, which is our social security system that certain people can become eligible for at the age of 67. So if you don't have enough income or assets or wealth, then essentially you can tap into this social security known as the pension. But the pension is only somewhere between $550 and $600 per week on average, depending on whether you're a single or couple. And so when you consider all of this, the future for many Australians is going to be quite bleak, I believe. And most people are just not preparing themselves. They're not starting to look for an alternative plan. And I believe that Bitcoin is the ultimate plan B. And so I want to tap into 5 really crucial benefits here today in this video that I believe that you and I should be thinking about a lot. If you're at that sort of age where you're starting to think about what's my future going to look like in 15 years from now when I reach retirement age. I'm 52, so for me, I've got 10 10 to 15 years before I'll be wanting to retire. And I want to do that gracefully. I want to have a comfortable retirement. I want to be able to travel and do what I want when I want, and to not have to worry about money. And so, for me, Bitcoin is going to play a significant part in that, and I'll explain why. And I want to share with you also, when you look at Bitcoin's historical growth rate and you start to project that out, 10, 15 and 20 years from now, what that actually could mean for you and your retirement fund. Because this is really important to keep in mind as well when you're starting to plot a plan and a way forward. But before I get into that, let's just talk about 5 of the really key reasons why you should be considering Bitcoin as part of your retirement fund. And let's assume that you're able to actually buy Bitcoin in your retirement fund. Obviously, if you have a managed fund in Australia, it's quite difficult to do. Most financial planners at this stage are still unable to recommend Bitcoin. Most of the financial planning industry, as I understand it, don't yet have access to the ETF as a Bitcoin product. And so the chances of them actually being able to communicate with you on Bitcoin are not great. In fact, likely they will be unable to do that. And so they're only going to be able to talk to you about the financial products that they're licensed to actually recommend. And so that in itself to me is a problem, because like we see in all of these centralized systems in our world that have become inflated, it means that we become trapped in a system that's not doing the best for us. And unfortunately, when you consider the performance of the average superannuation fund, which sits at around 8 to 10% growth rate, it's not even coming close to keeping up with inflation. Now that is a problem if you're looking at a long-term time horizon of 10, 15, 20 years, and you keep allowing this industry to continue to generate that kind of return when the true inflation rate is sitting at somewhere between 15 to 20% when you take into account the rate of inflation through currency debasement. And so, it's kind of like being out at sea in a boat with a hole in it, and your financial future is slowly sinking to the bottom unless you be proactive and you start doing something about this. Now, there are institutions, small companies in Australia that specialise in setting up superannuation funds, self-managed, and they'll issue you a statement of advice, and they will set up your SMSF. And then once you do that, you're able to actually buy gold, silver and Bitcoin, and in fact other cryptocurrencies if you want to do that. Now, I would only ever suggest buying Bitcoin for lots of different reasons, which I won't get into in this video other than the ones I'm going to share. But basically, once you have an SMSF set up, you're essentially then able to open an account with a brokerage, full service brokerage, or a regulated exchange, and who sells Bitcoin, and then essentially you're able to buy Bitcoin through your SMSF. And I know there are similar products and opportunities in the US through their retirement system, but it has to be self-managed in order for you to be able to access this. So what are the reasons why you would consider it? Well, I've got written down 5 key points here. Number 1 is performance. Okay, like I said, if you're only generating 8 to 10%, which is very normal, very average for most managed funds, superannuation funds in this country, then the reality is that you're slowly sinking your financial future because you're not keeping up with inflation. The thing with Bitcoin is we know that the average compound growth rate for the last 7 years, if you just take that as a snapshot, has been 59%. And so which would you prefer? Would you prefer a monetary system and an asset class doing 59% with your long-term savings, or one doing 8 or 9%? You get to choose. Now, I'm not suggesting that you would put all of your superannuation into Bitcoin, although I do know some people who have done that. But certainly you really need to start considering, why would you not put a portion of your long-term savings into it on the basis that historically the performance has been significantly greater than everything else. So performance is number 1. Number 2 is it's an inflation hedge. And like I said, inflation is not going away. It's going to continue to become an issue. And if you have your long-term savings, because that's essentially what our retirement accounts are, they're long-term savings sitting in managed funds that are generating 7, 8, 9, 10%, we want to make sure that we're actually keeping up with inflation. And we know that funds that are performing to that level are not keeping up with inflation. And so this is why you want to consider Bitcoin. And if not 100% or 50%, a significant enough portion in there so that it actually elevates the overall performance, so that you are at least keeping up with inflation in your overall retirement fund. Number 3 is diversification. Now, it's long been held as a belief that a really prudent way to invest is to be diversified. Different blue chip shares, second tier, high tech, low tech, high market cap, low market cap, maybe some gold, maybe some silver, maybe some real estate. So all of these different asset classes give us the opportunity to diversify and to kind of hedge our bets when it comes to performance. But, the thing is that the wealthiest people on earth typically don't diversify. And, this is, I guess, a little bit of wisdom that we have to keep in mind if we want to kind of emulate what some of these really wealthy people do. And that is that they double down on things that they understand, on things that perform well. And this is why, people who are in property, they typically make all of their wealth through property. People who are entrepreneurs, they typically make all their wealth through being an entrepreneur and building big businesses. People who are investors like Warren Buffett, they just invest over long periods of time in other people's companies. And so, you don't find that they're diversified in terms of their strategy. They just double down on the strategy that they're comfortable with and they know how to do. And so, Michael Saylor talks about this a lot, who, I'm sure you would agree is probably the loudest voice in Bitcoin, certainly one of the most ingenious, whose company has put billions into Bitcoin. And he often says that, why would you invest in the second, third or fourth best asset when you can invest in the best? And it's pretty straightforward thinking, I believe, that we need to kind of really tune into and rationalize with, because I think he's 100% right. So diversification, it just enables you to park an element of your long-term savings in your retirement account into this better performing asset that's going to lift the overall value of the entire thing over time. The 4th is that institutional adoption is not only coming, it's actually here. And what this means is that there's going to be billions, if not trillions of dollars coming into Bitcoin, and that's going to really drive the value proposition of Bitcoin and the price, I believe, over the next few years, because when you have a scarce, finite, fixed supply asset such as Bitcoin is, and you start having institutions now with very deep pockets who are all clamoring to buy and hoard Bitcoin so that they can sell you derivatives through the ETF, the exchange traded funds, and soon all your financial planners all around the world and even in this country will be able to say to you, hey, Mr. and Mrs. Smith, we think that you should now have a 3, 4, 5% allocation to Bitcoin in this portfolio. We know that Bitcoin's been around for 16 years and it's done an average compound growth of 59% over the last 7 years, but sorry, we couldn't recommend it to you, but now we can, because we can actually get fees from it. And so we'd encourage you to get an allocation to Bitcoin. That's coming very, very soon. And so, institutional adoption is just going to, I guess, add even more credibility to this space from people who have been ignoring it. But also the next thing that's going to happen is nation states and governments are going to drive adoption as well. And, we're already seeing this in the US. And, the US has stated that their ultimate goal is to acquire 1 million Bitcoin, currently sitting on about 200,000. And, it obviously remains to be seen how they intend to finance that. But the reality is that if they figure that out, again, when you consider that Bitcoin is an absolutely scarce, finite asset, what's this going to do to the price? And so institutional adoption is going to drive the value of Bitcoin. So if you're holding Bitcoin in your superannuation account, obviously you're going to be a significant beneficiary of that. And then probably the fifth and final point I want to make for today is, why would you put a portion of your long-term retirement savings into Bitcoin? I think you would do it for the fact that it is decentralized. It is sovereign money. It is completely portable, trustless, uncensorable, unconfiscatable. Essentially, every other asset is in the centralized system. And so with Bitcoin, we have an opportunity to put a portion of our long-term savings in the decentralized system where we have absolute ownership and control. There are no middlemen. There is nobody to change the rules on us. We're able to just move forward, sleep soundly at night, knowing that our long-term savings are in a decentralized network that is safe and secure and continues to get more decentralized and more even stronger as time goes on. And and that's, I think, a really good thing to have as a peace of mind moving forward as we head into retirement. And so I really think that this decentralized nature of Bitcoin is one of the key benefits that a lot of people overlook. And I think as we get older, it's one of the most important things that we really should be keeping in mind. And not only that, the portability factor, the fact that at the drop of a hat, if we have another pandemic or a crisis, we are in a very geopolitically unsound world, I'm sure you would agree. But the ability to actually take your wealth with you if and when you choose at any time, if the environment that you're in doesn't suit you any longer, I think is a really powerful thing to have in mind as well when it comes to Bitcoin. And you can't do that with any other asset. To divest and to liquidate other assets requires the involvement of other people, financial planners, agents, brokers, you name it. Whereas with Bitcoin, you really don't need any of that. So I want to leave it there today, but just before I move forward and close out this video, I do want to point out, I just got some quick data in, some quick numbers for you today just to finish this video off. So what would it mean if you look at the compound annual growth rate today? What would it mean, for example, if you were to allocate $100,000 today to Bitcoin in your retirement account? Well, we know that at 59%, which has been the compound annual growth rate of the last 7 years, $100,000 would be 10x in 5 years. So 100,000 would become $1 million in 5 years. But in 10 years, it would become $10 million. And this is the power of compounding, the eighth wonder of the world, as Albert Einstein used to teach. So 100K at 59% compound growth rate would in 10 years be 10 million. In 15 years, it'd be 104 million, and in 20 years would be $1 billion. So 100K today would be $1 billion in 20 years at 59% CAGR. Now, is anybody suggesting that Bitcoin is going to continue at 59% CAGR? I'm certainly not suggesting that. I'm just pointing out historical data and what that could mean if you project it forward. Michael Saylor believes, who is one of the biggest holders of Bitcoin through his company Treasury, he believes that Bitcoin is going to sort of level out at around 29 to 30% over the next 20 years. So if we put those numbers into a CAGR calculator, what we find is that 100,000 today at 30% is 1.3 million in 10 years, it's 5 million in 15 years, and it's 19 million in 20 years. So if you have a 20-year time horizon and you put 100K into Bitcoin now, at 30% CAGR, compound annual growth rate, which is what Michael Saylor broadcast at Nashville last year, the Global Bitcoin Conference. He did a presentation on this, and he forecast that 29 to 30% was the compound annual growth rate projection for the next 20 years. Now, if that takes place, 100K today would be worth 19 million in 20 years from now. So you can kind of run these numbers however you like. I would encourage you to jump onto Google and type in reverse CAGR calculator, reverse CAGR calculator, CAGR for CAGR, and you will see there's a calculator there, and you can start putting in, there's just 3 fields there, and you just put in the amount you would put in today, the average compound growth rate, and the time horizon, and it'll tell you what your capital will be worth in 5, 10, 15, 20 years from now. So I want to leave it there today. A lot to take in, but I really think the point is that if you're not already paying attention to your retirement account, you need to do that. We all need a retirement plan B in this world that we're in. The world is becoming more and more centralized, which means that you and I need to be thinking in a more decentralized fashion. And, you know, I think Bitcoin plays a really important role in all of that. So I hope you got some value today. Please like and subscribe if you haven't already. Feel free to share this content with those who may be interested in it. Leave me a comment if you'd like me to elaborate on anything. If you've got something to share, I read all the comments. I want to thank you for those. But other than that, I want to thank you for being here. Thanks for tuning in, and I look forward to seeing you in the next video. This is Zane signing out. Have a great day. Bye for now.